Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. No doubts the gold market right now is most interesting in market in general. So yes, we have a rally on the Bitcoin, but as I said yesterday in the video, that this is mostly technical behavior, because if you will take a look at the inflows in general of the funds on the cryptocurrencies, they are not really significant and actually they have decreased. This recent rally mostly is based on public money. They just worry about probable crash of any other minor bank, regional bank. It's taken out deposits, put in the crypto, just to see it in the cryptocurrency until everything dust will just pull down. So I think that this technical moment, and it's could be reversed as fast as it has started. Just recall when the special military operation has started by the Russia, and right in February you could see this big spike up on the Bitcoin and cryptocurrencies. That's the same. So if Russian investors are just running from the sanctions and put the assets from the West banks in the cryptocurrencies, here as you could see that no sanctions, but just the aware of the crash of the banks let people actually move cash out from the deposits and put them in the cryptocurrencies for some time. But this is a different story. So on the gold market, what we could say, with this recent rally and a general overall change in the sentiment currently in the minds of the investors, because the prices still stands uncertain. A few moments that I have talked about in a video on the Forex market, I think the major points. First of all, as I said, Fed and big banks are relatively and surprisingly calm concerning the problems in the banking sector. It seems that this actually moment have been planned with the big banks and the Fed. They are coming to the more centralization of the banking sector, more concentration. Because if Fed would like to risk Silicon Valley Bank, it easily could be provided funds immediately and they could keep going with the interest rate hike, but they haven't done this. Even more, there are a few other banks have collapsed. They have initiated the fund, but currently it's banking sector right now stands absolutely in different situation. And I suppose that this was made intentionally. Actually, recent comments from the Fed representatives from the big banks, chief executive officers, just confirm things that we have announced in our weekly report. Second, I think that this is done for starting the quantitative easing. So big banks need quantitative easing, but they have put responsibility on the minor banks. And currently, Fed could accuse these small and mid-sized banks that they have not ready for high rate, so we have to start quantitative easing. So it's just put responsibility of the Jerome Powell, and they are now becoming some kind of the hostage of the current situation. It's very comfortable to do. Nobody will accuse them, but actually currently we have to recall how the situation have appeared. This printing money 2 years ago and then starting with the strong rate cycle. Anyway, this is changing the situation currently. Our bread and butter trade is completed. So of course we can't imagine that this will happen in this way, but technical background once again was able to predict common events, and we are maybe a bit surprised, but market has reached the monthly target around 19 even with just 2 sessions. It's really fast. Currently, price stands at the 618 resistance and a daily overbought. Here is we come to CPI numbers. So at this point, it is not a good idea for taking the new long position, obviously. Besides, short-term traders currently will start booking profit, just because rally was outstanding and they need to see what will happen next. In this current moment, it would be better if you would like to trade gold. It makes sense to consider intraday short positions instead of probably buying right there. For taking the long position, we need to get some pullback. And the performance of the gold currently is coming on a new stage, because for this recent action, this might be it's pullback from the yearly pivot points, if you remember what we talked about in the weekly report. And if upward action will continue, a market will be able to erase totally the huge bearish engulfing pattern on the monthly chart. Now we're focused on 1950 top. If market return at back up and taken out of the top, it means that trend returns back to the bullish, and we should be ready for new highs on the gold market. It means that market will go to the yearly pivot resistance one, up above this area, and bullish and bearish pattern will be erased. This is theoretically possible because background currently has changed significantly. But this is probably a bit long-term story. We need to wait for maybe 1-2 weeks and see what will happen. In the nearest term, market stands at the strong resistance. On the 4 time frame chart, this bread and butter target has been completed. Here, as you can see, the whole coiling around it. Here, with this recent thrust up, you could consider different approaches for trading. You could watch for thrusting action here, right on the 4 time frame chart, or you could switch your time frame to the hourly chart and see what will happen here. Particularly speaking on the hourly chart, let's take a look. We could get double repo sell. It stands near the confirmation, and that tells us what I'm speaking about, the probable booking profit from the speculators. So they will try to just close the position, and market could show the pullback. If double repo starts, the most probable target will be somewhere around 1865, 50% support. Here, guys, by the way, you could see how market has tried from double repo yesterday, but it has not been confirmed, just because market hasn't shown the close below the 3x3. Just keep going higher. So alternatively, you could work with Napoli patterns directly on the 4 time frame chart. In this case, you could use direct thrust and watch for the patterns here, because here's thrust looks more solid, more reliable, and you exclude some minor noise that you could get on the hourly chart, especially on the report that we could get today. So here you, for instance, could watch for bread and butter buy. This market will show the drop to the 1875. This might be the bread and butter buy to be formed. Maybe double repo also will be formed on the 4 time frame chart, but it will happen probably later. So that's the only things that we could consider currently. So intraday trades based on the thrust, but on a daily chart there's nothing to do, because we can't go actually short due to the strong rally and daily bullish trend, and we have to wait. By the way, on the daily chart we could tell that we have Jordan Apple bearish stretch. It's because market hits overbought and right at the major 618 level. So from that standpoint, this is also bearish pattern, and it suggests some pullback. So the only direction that we're considering currently is the short-term intraday bearish positions.